Good evening, everyone, and welcome to our online live sharing class. So, since the beginning of our online live sharing sessions, many people have given me a lot of positive feedback. So, saying that our live sharing sessions have been very helpful to them in terms of they've learned a lot of new knowledge. Now, whether it's technical analysis or trading concepts, or even the inspiration brought to us by international trading masters, these have all helped them in their journey of investing. Now, this is what makes me enjoy my job the most. This is the reason why we do these online sharing classes. It's to educate. Now, of course, maybe we have not done enough yet. Next, we're going to work even harder to bring you more exciting content. Now, of course, if you have any needs or there's something you want to learn about in certain areas, you can always send a direct message to my assistant. Now, my assistant will organize and summarize everyone's input, and I will explain to everyone the topics that concern you the most. All right, so not going on too much into that as well. So if there's something you'd like to learn, please reach out to us. We are more than happy to kind of go over your opinions and see what we can put together. Okay, jumping into our contents for this evening. What we're going to be sharing tonight is going to be similar structure to the previous lesson, but the content is going to be a little bit different. Now, therefore, each online sharing session presents the latest content. Now, we want to ensure that everyone attending our live classrooms can learn updated knowledge and information. So every class we try to push something new. This week, we're in the process of IPO subscriptions. Now, as everyone knows, engaging in IPO subscription in any country's stocks is a profitable endeavor. And it is one of the sources where stable profits can be obtained. Yesterday, the IPO subscription that started differs from a regular IPO. I have previously shared some information about this IPO with you all, and tonight I'm going to provide you with the latest developments in regards to this IPO. Furthermore, during the last online session, I introduced Jesse Livermore to everyone. Now, of course, providing a complete introduction of this individual would take forever, possibly 3 days, 3 nights. So we can only share some of the important aspects like his experiences, his philosophies, his methods, the insights he can offer us, and then which ones are suitable and relevant for us. So it's inspiring for us to learn a little bit more. So we got a pretty exciting evening tonight. All right, so tonight we're going to start by analyzing and sharing the fundamental of major news and financial data. So I always like to start off with news. Now, lately, besides the market data from the US and the impact of the expectation for interest rate cuts, the biggest event is the elections within India. Now, it is expected that the domestic market in India will continue to be influenced by the elections until the results are announced on June 4th. Now, like yesterday, the ongoing adjustments in the stock market, many analysts attribute the reasons for the adjustment to the elections. However, my personal opinion is a little bit different. I believe that the market fluctuations are a comprehensive response. As stated in the first principle of Dow theory, price reflects everything. Now, I'm not going to dive into this topic too much here in the Dow theory, but if you are interested, you can study the relevant content on the Dow theory yourself. We've done a couple lessons on that before. All right, so jumping into our first piece of news. S&P bumps up India's outlook to positive betting on policy continuity post polls. So, the internationally renowned rating agencies, which have raised the outlook for India's rating, now this is a good thing, and it is quite significant of a good thing. But this kind of positive news takes a long time to be reflected in the market. Now, on May 29th, credit rating agency Standard & Poor's stated that due to India's strong economic growth and continuous improvement in the quality of government expenditure, they have raised India's rating outlook from stable to now positive. Standard & Poor's said in the statement, the positive outlook reflects our view and sustained policy stability. Deepening economic reforms and high infrastructure investment will maintain long-term growth prospects. Coupled with a prudent fiscal and monetary policies, it reduces the government's high debt and interest burden while strengthening economic resilience, which could lead to a rating upgrade in the next 24 months. Now, the rating agency added, we expect that strong economic fundamentals will support growth momentum in the next 2 to 3 years. Additionally, India is undergoing the largest democratic elections, with the 7th and final phase of voting scheduled for June 1st and the results set to be announced on June 4th. Standard & Poor's emphasized, regardless of the election results, we expect economic reforms and fiscal policies to remain broadly continuous. For further positive expectations for India, Standard & Poor's stated that if India's fiscal deficit significantly shrinks, resulting in government's net debt dynamics structurally falling below 7% of GDP, then they could raise its rating. Now, Standard & Poor's also forecasted India's real GDP growth rate for this year to be 6.8%, which is commendable compared to other emerging market countries amidst a global economic slowdown. The Indian government is set to release GDP data for the first quarter of January to March on May 31st. So from Standard & Poor's rating report, we can see that India's economic development is stable and positive, and even the election results will not affect the economic fundamentals. The continuous improvement of economy is also a fundamental guarantee for the stock market to remain bullish. So therefore, as I have always said, there should be no problem in the medium to long term for the Indian stock market. As long as the short-term fluctuations intensify and the profit effect is poor. Everyone should not underestimate the damage that such fluctuations can cause to your main capital. Many individual investors have made some money in a very favorable market environment and might profit during these process of fluctuations, or even end up losing money. However, I want to tell everyone that as long as you join our wealth growth plan and strictly follow the trading instructions, then not only will you not lose profits, but you will definitely have a higher profit margins waiting for you. Okay, second piece of news. India's FY24 GDP growth to hit 8%. Infra investments to exceed consumption in fiscal year 2025. Now, in fact, with the improvement of economy, Standard & Poor's is not the only opportunity to interpret this way. So a senior economist and executive director at DBS Bank expects the full year GDP growth rate for fiscal year 2024 to be 8% and adds the government will continue to focus on infrastructure spending in fiscal year 2025. India's GDP for the quarter from January to March 2024 and for the full year will be announced on Friday, May 31st, which is tomorrow. Now, the Indian economy has shown strong growth, especially in the first 2 quarters. The Reserve Bank of India has actively pursued a hawkish monetary policy to support economic growth. The RBI's rate-setting group believes that enduring price stability will lay a solid foundation for a period of high growth. Now, the Monetary Policy Committee decided at its 7th consecutive meeting on April 5th to keep the benchmark repurchase rate unchanged at 6.5% and to continue to focus on unwinding the accommodative policies. In the last quarter of quarter 3 in the fiscal year 2024, India's economic growth rate reached 8.4%, the fastest pace in 6 quarters and still the fastest among major economies globally. In the current economic scenario, the International Monetary Fund raised its GDP growth forecast in India in fiscal year 2024 by 30 basis points to 6.8, citing robust domestic demand. Now, of course, this information has both positive and negative impacts on the stock market. On the positive side, strong economic development is certainly the foundation of a bull market, which is long term. On the downside, the central bank is unlikely to cut interest rates for now, which may disappoint the market in the short term. But this is all temporary. This also aligns with our expectations for the market, indicating that medium and long-term outlook is positive. However, there will be frequent fluctuations in the short term. So, a couple of two great pieces that talks about the stimulus of India's economy. Everything is on a 5 to 10 year plan, all long term. So in the long term of things look great. Short term, we have a lot of volatility. We have a little bit of fluctuations. So we just got to be a little bit patient and we got to be a little bit careful. Okay, last piece of news. This is going to be Goldman Sachs pushes back timing for first Fed rate cut to September. So this is a piece of financial information from abroad. Now, Goldman Sachs economists recently delayed their expectation of the Federal Reserve's first interest rate cut in this cycle from July to September. Now, it's important to note that regardless of the country, interest rate cuts and hikes happen cyclically. It's not possible to raise rates today and cut them tomorrow. Now, economists point out that recent statements from the Federal Reserve officials indicate that a rate cut in July not only requires better inflation data, but also clear signs of economic weakness or labor market softness. Data released on Thursday showed a decrease in weekly jobless claims and strengthening in Purchasing Managers Index, indicating that this does not seem like the most likely outcome. Now, they mentioned that the timing of the first rate cut still remains a puzzle. So first, we still believe that a rate cut is optional, which reduces the urgency for the rate cut. Secondly, by September, inflation may improve significantly, but still not perfect, and the inflation rate is still at a year-on-year level, making a rate cut a less obvious decision. Now, third point, although the Fed leadership seems to share our relaxed view on inflation and outlook, and may be ready to cut rates soon, some members of the Federal Open Market Committee still seems more concerned about inflation and less willing to cut rates. Goldman's latest forecast aligns with market expectations. According to the Federal Reserve Watch tool from the Chicago Mercantile Exchange, the likelihood of a rate cut in September is 54%, while the likelihood for July is only 12%. Now, certainly, this isn't particularly good news for us. Global investors surely hope for this rate cut to happen sooner rather than later. Now, why is that? So, on one side, it presents strong trading opportunities, and then on the other side, it's a positive for the stock market. Since the positive news won't be coming anytime soon, it's just a little bit disappointing, but we've always expected the rate cut to happen in September. If it was to happen in July, it would have been an added bonus for us. So my thing I always say is, always hope for the best, but you got to prepare for the worst. Okay, so jumping into our market recap. So let's review the performance of the domestic stock market in India today. Now, under the influence of the overnight decline in the US stocks, the domestic market in India also made corresponding adjustments today. The index has experienced a maximum intraday decline of over 1%, and the trend of downward adjustment in the market is currently underway. A short-term bearish market has already formed. On a macro level, due to the fall in the U.S. Treasury yields, the U.S. dollar has softened slightly. Additionally, because the market once again expects the Federal Reserve is unlikely to cut interest rates in the short term, it has created some pressure on our markets. So for the domestic India market, it is less than a week away from the election results, and the market atmosphere is a little bit tense. So, moreover, we have already told everyone before numerous times that before the end of the election, the market is expected to maintain high volatility. So, without any further delay, let's jump into our reviews. So, first taking a look at the market trends of our Nifty 50 index. So today, the Indian stock market continues to be under pressure, maintaining a downward trend with fluctuations throughout the day. Bulls can be said to be powerless, with only a slight rebound appearing in the last 30 minutes before closing. Since the previous trading day, after the Nifty index broke below the technical support level of 22,800, it can be determined that the uptrend has failed. Now, why do we say that? Because a new upward breakthrough, like on May 23rd, should technically continue to rise, but the market did not witness such a scenario. So this indicates that the breakthrough on the 23rd may have been a false one, or there was no further extension of the uptrend after the breakthrough. Now, of course, another reason for today's market downward adjustment is the expiry date of derivatives. Usually during the expiry date of derivatives, whether it goes up or down, the volatility will be larger than usual. So today's fluctuations are not surprising at all. So technically, 22,800 was supposed to act as a support, but during this price correction process, it didn't play that role. So in the next round of price increase, it could still become the resistance at the 22,800 level. As the index continues to adjust in the short term, it's not advisable to predict how far it will fall, as there is no sign of a bottom in the charts. Now, previously, we've been telling everyone not to have high expectations in the short term, and it still holds some reference significance. So in terms of strategy for now, it's not recommended to consider any buying opportunities in regular stocks. It's not the right time yet. All right, so that is how our Nifty 50 looks as of now. We had a great week of rebounds, and now we're seeing a slight adjustment period. Volatility is high. Elections around the corner. We've repeated this many times. All right, so jumping into our Sensex. So let's continue to look at our Sensex index. Now, this index also underwent an adjustment downwards. Now, last time I shared with everyone that just by looking at the charts, the Sensex seems to have a bit more movement compared to the Nifty 50 index. Now, last time I mentioned that by analyzing the chart of the Sensex alone, the market is definitely expected to decline. However, even though the Nifty 50 index and the Sensex index did not move in sync last time, we decided to wait for the Nifty index trend to make a judgment. The next day, which was yesterday, the Nifty index broke below an important level and the downward trend became very clear. So from a technical chart perspective, this adjustment is still occurring within an uptrend, encountering resistance and being suppressed, since the previous uptrend channel has not been broken and the adjustment has already begun. In the short term, the market is still likely to be bearish. Now, the cautious sentiment related to elections has led to a significant outflow of foreign funds, which has not eased. Now, on the contrary, in the last trading day, FIIs once again sold stocks worth 5,841 crore Indian rupees, which undoubtedly intensified the market's bearish factors. The India VIX index, which measures the market volatility, has surged by 88% this May and is currently at a very high level, indicating that the market's nervous sentiment has not eased at all. All right, so as you can tell, things are pretty tense. Elections around the corner, no interest rate cuts. We got FII funds leaving. So this is the overall summary of both our indices. This is just a briefly shared comprehensive analysis of the Nifty index and the Sensex index. I hope this was helpful to all of you. So let's continue to the next part of our evening. All right, so IPO subscription. Now, in order to ensure the smooth implementation of our wealth growth plan and to harvest more profits, this week we're carrying out the subscription of 2 IPOs. Now, amongst them is the VLS Transcore IPO, which was subscribed on Monday. Have already started the allotment of shares since today. Now, since we didn't get a large allocation for this IPO, it is possible that only a few people will be allotted shares and most will not. Now, even for those who are allotted shares, the quantity is expected to be relatively small. Although it's an opportunity to make money, it may not meet our expectations. Second part, congratulations to the members who have been allotted shares. For those who haven't been allotted shares, don't be discouraged. Now, why? Because starting from yesterday, we have gotten a larger allocation for the ZTech India IPO, which should benefit more people here, enabling the majority of the members to realize their profits. Now, why do I say it will benefit the majority of the people here and not all? Because while using our asset management accounts to subscribe to IPOs, the overall allotment rate will be greatly increased. However, individual traders, it cannot be guaranteed that everyone here will be allotted shares 100%. Now, ultimately, whether you're allotted shares or not and how many shares you're allotted depends on the amount in your account and quantity you subscribe for. I'm not going to go into too much details about this, but let's take a look at the progression of the ZTech India IPO up until now. Okay, so ZTech India, a little bit background, is established in November 9th, 1994. The company is committed to providing customers with innovative, safe, and environmentally friendly engineering solutions. Now, these solutions include three main categories: sustainable theme park development, industrial wastewater management, and geotechnical professional solutions. Now, the IPO began accepting applications yesterday, which was on May 29th, and it's going to close at 5 p.m. tomorrow. So the application period is not long. For those who want to apply for shares, there's still one more day to apply. Everyone should act quickly. If you want to apply, please apply. I also want to mention that before this IPO is a 100% profitable opportunity for all of us. We're guaranteed at least a minimum of 100% increase. Now, of course, the premise of that everyone needs to apply first and follow the methods I have mentioned. You just got to apply for the allotments. Only by applying can you have the chance to win. And only if you win can you reap the corresponding profits. Does everybody understand this easy point? The announcement of the successful allotment for this IPO will be on June 3rd, with the listing date being June 4th. So therefore, time is very tight. So guys who wish to participate, you must act quickly. Now, regarding this IPO company, what is its specific situation? Which industry does it belong to? How about its development prospects? So I have already shared with everybody before. Maybe some people here are still not quite clear. So today I'm going to introduce it again. After all, the focus we are going to introduce tonight is how the IPO progress of the company is going. Now, ZTech India initially designed civil engineering products and services having the most advanced geotechnical solutions in India's infrastructure and civil engineering projects field. Now, at the same time, the company is dedicated to implementing innovative wastewater management solutions for industry units using cutting-edge GEAST technology. Now, this dual commitment emphasizes its overall approach to sustainable practices, transforming waste materials into recreational spaces while effectively managing industrial wastewater through advanced technology. They're committed to providing customers with innovative, safe, and environmentally friendly engineering solutions. Now, as I've said, this company is engaged in sustainable theme park developments, industrial water treatments, and the geological technical professional solutions. So it's a very, very niche market what they do here. Now, currently the company is primarily focused on sustainable theme parks, which is about 60% of the revenue. The main work of the theme park division has improved its revenue and profits for the fiscal year 2024. So ZTech India's limited revenue increased by 160% between the years ending March 31st to March 31st last year to this year. And post-tax profit is increased by 296%. Now, with such fundamental conditions, it plays a significant role in driving the stock price after the IPO listing. From a relatively long-term perspective, this is a very good stock. That's why we have signed a stock price boosting agreement with the lead underwriter for the IPO listing. So why do I say that the return on the investment of ZTech India's IPO listings is going to be a lot higher? So as of May 30th, 2024, the second day of subscription, at about 4:44 p.m., the subscription amount in the retail category was 78.15 times, in the QIB category was 7.9 times, and in the NII category was 49.2 times. So in total, it's been oversubscribed 51.90 times. Now, of course, there's 2 points to take notes here. The first one, it's only the second day of subscription and it's already oversubscribed by 51.90 times, especially in the retail category, reaching 78.11 times. So just think about how popular this IPO is in the market. It's such a hot market, but if you apply with your ordinary account, can you get allocated shares? Basically, it's not going to be likely with your own ordinary accounts. So second point, when I was checking this data, the statistics were not finalized yet. That means the number of subscribers is still increasing. Can you believe this level of popularity? What does this indicate? It shows that there are many people interested in buying shares of this company, and it's clearly a situation of high demand and short supply. Now, as I've mentioned before, this company has great revenue. They're improving year to year. They're very sustainable. They work in energy and wasteman fields, which is like a go green, like a global green agenda. So everything about this company just ticks all the boxes, right? So this is only the situation on the second day of the subscription, and the second day hasn't even ended yet. The subscription period will last for a total of 3 trading days. When the market experiences such exuberance, do you know what it signifies? It means that the quota for IPO subscription is in short supply, and some investors are willing to pay even higher prices for the company's shares after they go public. So just think about it. Can the price of this IPO not increase after it goes public? Now, we are providing you with such a high chance of winning in the subscription, which is equivalent to a guaranteed doubling of your profits. So honestly speaking, opportunities like this are rare. So everyone, just cherish it. We're doing this so we can win the asset management, and we're doing this for everybody here who supports us. So don't miss your chance. Okay, now as you can see here, even though ZTech India has not officially gone public yet, its GMP, which is a gray market premium, has already reached a high of 68.18%. reaching 72.73% at one point yesterday, which is more pronounced in its expectations. Now, some people don't know what GMP is. The gray market premium is the price at which an IPO is traded in the unofficial and unregulated gray market before the listing. GMP reflects the market's response to a company's IPO on the day of listing. So a positive GMP premium indicates that the IPO may be very profitable, while a negative GMP indicates that the IPO may be discounted. So from ZTech India's data, this is a premium and is only the beginning of the second day of the application. So what about tomorrow? What about next Monday? This GMP premium will continue to be updated until the evening of the listing, which is such a high premium already. What will happen after the IPO is listed? We can tell you that this have conducted rigorous and meticulous research on the company as well, because we have high hopes for the company themselves. So we're determined to secure more IPO allocations, as the current market has high enthusiasm for the company and represents great potential. We have signed an agreement with the main underwriter for the IPO to increase the stock price. Okay, so these are all the details you need to know. I'm not going to talk more about this. Those who should apply for it should do so now. As mentioned earlier, such opportunities are going to be rare. It's once in a lifetime. So everyone, just cherish what you have in front of you. If you're not attentive to making money, there's nobody else that can help you. So apply and get your allotments. Okay, so we're going to stop here with the IPO of ZTech India today. And we're going to continue to share about the person we talked about last class, Jesse Livermore, the man of the century, you know? So his journey from an office clerk to a Wall Street legend, his trading experiences, his successes, and failures are perhaps the most fascinating ones in the Wall Street stories. Now, even today, many stock and commodity traders still express deep gratitude to Jesse Livermore for sharing his experiences. His public techniques have been circulating for decades. As long as he adheres to his trading rules, he can earn millions of dollars. Livermore has also repeatedly ignored trading rules and lost all his wealth. Jesse Livermore started from scratch, trading with his own money instead of using other people's money, like modern investment banks and hedge funds. Now, this is a very, very important point. Do you understand why? By different measures, his wealth calculated in today's currency value reached a high between $1.1 billion to $14 billion. Now, what's truly fascinating about Jesse Livermore is that there's so many triumphs, and with each triumph came a heavier loss. And once we go over these stories, just kind of picture yourself in his situation. He goes from nothing to everything, back to nothing, back to everything, back to nothing again. And each time he comes back stronger. Okay, so we're going to talk about the legendary experience, right? Now, Wall Street never changes. Speculators change, stocks change, money bags change hands, but Wall Street never changes because human nature never changes. Now, the market always has one direction. It's neither bullish or bearish, but it's the right direction. So in 1907, Jesse correctly predicted the stock market crash, making $3 million in one day. $3 million back in 1907. Now, financier Morgan asked him not to short sell anymore to save the market, and he graciously agreed. That means he could have continued to short the market. Now, after this incident, Livermore earned the nickname Wall Street Bear. And we all know Livermore loves shorting stocks when it hits new lows, right? So in 1919, President Wilson invited him to the White House and asked him to close out cotton futures to help the country urgently. Isn't this legendary? The president needs you to close your options to help the country. Now, in 1921, during an economic downturn and a slump in the stock market, he went long. He accurately went short before the crash, making $100 million and reaching the peak. So right before the market crashed, he saw it coming and he shorted the market. Now, he is the king of speculation. He is a legendary figure in the Wall Street. And today, we're going to retrace the life of Jesse Livermore, including what you already know, and then maybe some of the things you never knew, and the insights his life brings to us. So, Jesse Livermore was born in 1877 in America. Both his parents were farmers. As the youngest of 3 children in the family, Jesse did not receive much attention from his father. But his mother adored him, so he was more of a mama's boy and aimed to teach him the best things in life. So fortunately, Jesse learned quickly. He started learning how to read and write at the age of 3.5. By the time he was 5, he could already read newspapers and found the financial sections particularly interesting. However, his father, a pragmatic man, forced Jesse, who was still studying at the age of 14, to drop out of school and work on the farm to earn money. So young and determined, Jesse left his hometown with big ambitions on a horse-drawn carriage. Jesse, who exuded maturity beyond his age, quickly secured a job at Payne Weber Company and gained the trust of others. Now, as a junior trader earning about $5 a week, his job was to write numbers on the trading board, marking the beginning of his legendary life. By the age of 15, Jesse started taking his $5 weekly salary to the market for trading. Within a few weeks, his profits had exceeded his earnings at PaineWebber. So every week's salary, he would inject that into the market. Now, this was Jesse's first significant earnings through studying market trends. Later, at the age of 16, he left Payne and started trading in the bigger market of Boston. So he was there about a year. Crazy life. Dad made him quit studying, work on the farm at age 14. By the time he was 15, he left to work at this trading company. By 16, he was making enough cash, moved to Boston to a bigger market. Now, his profits were so substantial that trading firms even issued a rule permanently banning Livermore from entering. He decided to try his luck in New York, but due to a 30 to 40 minute lag in real-time data at the same time, Jesse ended up losing everything. So this was the first time he has lost everything. Now, despite being brutally beaten, Jesse returned to the starting point of his success with confidence. So once again, he wandered into the trading market in St. Louis. Now, due to the ban trading against him, he had to entrust others to trade on his behalf. Now, in the end, he made $5,000. Now, this $5,000 later made Jesse Livermore's name resound through the clouds of Wall Street. Now, keep in mind, $5,000, he was only earning about $5 a week. That would take 1,000 weeks to earn $5,000. So this is quite substantial. So in 1901, Jesse returned to Wall Street during a bull market. At the age of 24, he immediately made $50,000, but he lost it in cotton trading. Now, this failure has taught Jesse a lesson, and his trading style began to become more conservative, overly cautious, and a little bit hesitant. So by the age from 16 to 24, he made $50,000 and lost it all. Now, by the age of 28, Jesse had $100,000 to his name. So in about 4 years, he made $100,000 again. Now, during a shorting of Union Pacific stocks, news of a San Francisco earthquake caused a sharp drop in Union Pacific stocks. Now, at this point, Jesse had $250,000 cash. In 1907, Jesse once earned up to $1 million in a single day. However, upon seeing the market in crisis, Jesse decided to do things right and wisely. He started buying as much as he could, encouraging other Wall Street people to buy as well, which led to market recovery. Now, Jesse gained the title of a hero. Following his lead, many of the companies also became wealthy. So sometimes it's okay to do the right thing, you know? Now, in just 1 year, Jesse made a leap from $0 to $3 million and entered a new class of wealth. However, following that, various luxurious and even extravagant lifestyles led him to live beyond his means yet again. So he once again returned to the stock market, earns $3 million. He's gonna spend, buys himself some nice properties, gets married, things like that. Now he needs to go back to the stock market and make money again. In 1908, so shortly, just 1 year later, he lost all of his $5 million of fortune in the Chicago commodities market. Now, this time he found himself in a very desperate situation. So in 1915, 7 years later, Jesse went bankrupt. The stocks he bought in 1907 to help the market gave him a cushioned opportunity, enduring until the long-lasting bear market has passed. Now, just 1 year later, he earned back the lost $5 million in the ensuing bull market. So his investments back in 1907 came back and rescued him in 1915. So he loses $5 million and he gains it all back. He loses $100K, $250K, gains it all back. The renowned Livermore frequently appeared in media headlines, and people relied on his stock recommendations in newspapers. Jesse established a formal trading office and made $15 million. 2 years later, they moved to a larger office, and Jesse had 60 employees under him. To write reminiscence of a stock operator, Edwin Leverrier contacted and interviewed Livermore, getting permission to publish it in 1923. During its release, no one realized that the real prototype of the book was Livermore. The character in the book's name was given an alias of Livingston. However, it sold very well and was reprinted many, many times. By 1929, Livermore keenly sensed some changes in the market. He decided to leave the office and leave the trading until October 29th. The news of Black Tuesday spread like wildfire. The market collapsed, and countless traders went bankrupt overnight. The listener's face turned pale. The sense of panic enveloped Dolores and her mother, his wife. So when Jesse returned home, they cried to him that everything was over. But however, what they did not realize was Jesse had already made billions shorting Wall Street. So meanwhile, everybody was crashing. Jesse was shorting the market. Jesse got the news that the Bank of England was preparing to raise interest rates, accurately predicting the stocks were about to be sold off, and the stock prices would undoubtedly fall. Now, at the same time, he shrewdly analyzed the value of economic depression warnings through various clippings and took the lead by continuously shorting the stocks. Now, because of his accurate judgment and being ahead of the curve, he's made billions of dollars, making a fortune. So, $1 billion back then is not like $1 billion now, right? The GDP was only $4 billion at the time. Now, after he made the billions, 1 year later, Jesse had announced his third bankruptcy. Now, this time he felt very helpless to turn the tide. He had friends who made a comeback, but at 60 years old, this bankruptcy could be fatal for him. Now, despite Livermore's high profile, returns in the stock market in the first two times, the establishment of the U.S. Securities and Exchange Commission and the lost passion drew a final conclusion to drag everything into a depth of despair. Now, a series of family changes and establishments of the U.S. Securities Exchange Commission deeply made Jesse realize that his past glory was no more, and he could no longer dominate Wall Street trading market like before. So in 1940, Livermore's book, How to Trade in the Stock Market, was published, but clearly it was not as popular as his previous masterpiece. No passion could always dominate the heights in the game of stock trading sages. In 1940, feeling lost in himself, Jesse committed suicide with a gunshot in a hotel in New York. The reason for Livermore's final suicide is not what everyone guesses. Now, suicide due to bankruptcy is what everyone thought, or that's their guess, but it's more likely due to depression caused by marriage and family life failure. You have to keep one thing in mind. These guys are obsessed with the markets, are breathing, eating, sleeping on the market. They don't really pay much attention to anything outside of that, right? So if you've done your research, you would know that he had been bankrupt 4 times. So bankruptcy was not a terrifying blow to him. And he managed to live quite well after his bankruptcy. In his later years, although Livermore did experience his 4th bankruptcy in his career, his actual life was not impoverished because he had set aside a large sum of money for himself and his family in advance. And that's what all wealthy people do. They have trust funds. They have insurance to never lose it all, right? He had enough to ensure that he continued to live a very luxurious, wealthy life. Now, although the legendary life of Jesse Livermore has come to an end, his wisdom has been passed down for the century, and it has influenced generations of traders. The mistakes he made are also seen by today's traders as experiences and lessons. So this is a great quote by him. There's time to go long, there's time to go short, and then there's time to go fishing. So you have to be patient in this market. Just like right now, the Indian market is very, very volatile. So we just wait. So right now, it's a time to go fishing, right? Now, although the legendary and brilliant life of Jesse has come to an end, his story is still widely circulated on Wall Street and is a topic of great interest. So what kind of inspiration will it bring to us? Fundamental analysis. Jesse never believed in rumors, but relied on thorough preparation and research and fundamental analysis, and even conducted market research himself. He followed the trend, only traded in leading stocks with broad prospects in strong industries, and sold stocks in industries with poor prospects. He was extremely disciplined, maintained a regular routine, had a simple diet, and made accurate judgments. He emphasized that the company's profit capacity influences stock prices. So that's number one. Point number two, the trend aspect, the trend analysis. So unlike traders who frequently trade in the market, Jesse was very, very patient. As long as he judged the trend correctly, he could wait until the best opportunity arose. Successful traders mostly move along with the market direction and it minimizes their resistance. So this is a very, very key point. Patience. Waiting for the right time. There's no rush. You do all your research and you find the best time to enter and the best time to exit. Third point. Now, risk management, right? The risk aspect. Now, Jesse's bold move on shorting Wall Street for 100 million led many to believe he was a very high risk preference person. But that's not entirely true. Livermore was sometimes very conservative when faced with risk, but he always had a saying, when I see danger signal, I don't argue with it, I move away. Now, a few days later, if everything looks great, I come back. So, you must control your own risk appetite. Everybody's is going to be a little bit different. So you have to control how much risk you can bear, right? Because there's nothing that's going to be 100% in this market. Now, the fourth and final point is the psychological aspect. Now, good stock speculators do not solely rely on technical analysis and insider information. They also deeply study the underlying desires, the human nature in stocks. Now, Jesse grasped this point, studied trading psychology, and although he believed that following the majority is relatively safe, he always had the idea of breaking away from the crowd and moving in the opposite direction. Now, Warren Buffett also said something similar. Be fearful when others are greedy, and be greedy when others are fearful. So that's the psychological aspect. There is no news on Wall Street. What is happening today in the trading market has already happened in the past, and it's going to happen again. Wall Street never changes, as I've mentioned. Speculators change, the stocks change, money changes, but the Wall Street remains the same, and that is because human nature never changes. Okay, so that is going to wrap up our evening on the session tonight. I hope a lot of you learned something kind of cool. Like when I was going through making the lesson tonight, it's just so amazing, so fascinating. Somebody can have so many highs and so many lows and still come back and crush the market. Now, of course, not ideal that he ended up taking his own life, but depression is a real life battle, you know? But I just want you to go show you, most of these wealthy traders come from nothing. They have a keen eye, they study, they live, they breathe the market, they do everything they can to find a trend, and they have so many fundamental blocks that have made them into a good trader. You know, they're patient, They manage their risks. They find ways for different analysis. So many things. And as we keep doing these lessons, you're supposed to be adding on to your knowledge base. So that is all for today's online class. Very, very interesting guy. Maybe pick up a few of his books. Read through them. You could even read it again. You get a different view each time you read them. Start memorizing some of the previous stuff that we did, such as the Dow theory and things like that. All of these things can be applied to your real life trading strategies. So I really want to encourage everybody to do so. So our next online broadcast is scheduled for Tuesday, June 4th at 8 p.m. I hope to see everyone here again. Thank you very much for all your support, and I'll see you all next time.